doing? Welcome to today's portfolio update. In today's update, we are going to take a look at the market. We have seen at least a 2%. We've seen a 2% decline in the market this week again. We've seen a 2% decline in the market. We're going to take a look at how the market has been doing. For the month here, we've seen, let's see here. Sorry about that. We've seen a 2.2% decline for the month, and for 6 months we can see that the market has pretty much gone up, and for 1 year we are still up despite during the coronavirus times. We're still up, but we came down pretty hard as compared to last week, because last week we were up I think like 8% or something like that. So we've lost roughly 5% for the whole year to date outlook on the market. But if you go to 5 days here, you see during the week we kind of held steady, and then for the past 2 days, from Wednesday to Friday, we end up losing 3%. So most of the losses came during those 2 days, and that was right after the Federal Reserve came out with their take on the market. The market just went down. I guess the market didn't like what the Fed had to say, and that's that. So if you pop here into the portfolio, we can see that the portfolio is still holding pretty well. Portfolio is up 13% as compared to the market here. As compared to the market, if we look at year to date, as compared to the market, we are pretty much, like I said, we're down as the portfolio is up as compared to the market, which is a good thing. That means I'm doing some things right here. We're gonna take a look at the portfolio a little bit more deeper. Why I haven't been adding new money into the portfolio, I'm gonna touch on that in a bit. In the previous portfolio, you can see the balance that we had was $27,404, and the title was "Why I'm Not Worried About the Stock Market." The current video that you're watching now, I'm still not worried about the stock market, because as compared to what the whole market has done in 1 year, the market has pretty much gone up basically because of the tech sector. So I wanted to point out that for me personally, managing my portfolio like this, I'm not still worried about the stock market. Matter of fact, I think the price is even too high right now. So I'm not putting any new money to work right now, because I'm just holding off cash, because I don't know what's going on with the stimulus check, because that is a huge that would be a huge catalyst for the market, either for it to go up or for it to go down. Now, I'm holding off cash and not adding any more money into the portfolio, because first of all, I want to build up some nice decent cash, just in case the market will go down heavy, right? If the market goes down heavy, I want to be able to go in. I want to be able to go in and be able to buy stocks at a cheap price, right? And if the market would go up after the Congress approve stimulus payment for everybody, I would like to be able to continuing dollar cost average. So I'm just trying to hold off on cash and just build up cash to the point whereby if there's a big downturn, I have the cash to be able to deploy into the market. And then if there is a huge reversal going back up, I also have the cash to be able to deploy into the market as well. Looking at how the market has done for the past year, let me show you guys right here. The market has been up 9.8%, which is the average. You know, yearly you can expect that stock market will go up 7% on average. That has been the historical returns for the stock market in general from the inception of this S&P 500 index fund. You can see historically the it's pretty much gone up. And from here during 2007, like I've highlighted before, since 2009 we saw a 52% decline in the market. Now we could have had the same thing here during the pandemic, but we only saw a 34% decline. And the reason why this reversal happened is because Congress took action. The Federal Reserve took action, and it really pushed the market up because people had money during the pandemic, because they had unemployment, they had unemployment money, they had stimulus check. Some people were just flooded with cash, so most people deployed that money into the market, which held the market grew pretty much onto the high year, like 60%. And like I pointed out in previous videos, when the market went down like this, I was a net buyer of stock because it was down 30 from the previous high, which is right here. The market was down 33%, right? So me personally, right now, what I'm doing at this point is I'm just holding off on cash. I'm holding on to cash because if we see something that looks like this at this point, something that if from this 60% it goes down another like 20% or something like that, and then Congress passed stimulus check, a bunch of things that could happen. Congress can pass check, the Fed can come out and say, hey, you know what, you people don't get scared, we're gonna buy more treasuries. The government will have a lot of money to give everybody. You don't have to worry. Then, you know, I want to be able to have money if we see something that looks like this again. I want to be able to have money to be able to go in and, you know, start buying stocks. So I'm just holding on to the cash, because if we are going to see a big downturn, then this is just the beginning, right? Because this is just only 8%. So I'm just watching to see what's going to happen. Like I said, the market was actually up before the Federal, it was up 4% before on Wednesday when the Federal Reserve came out with after their meeting for the next 2 days. It now went down another 3.4%. So I'm keeping a close eye on what the Fed is doing, how the market is reacting to the Fed. That's what will make me say, okay, let me start deploying money back into the market and start beefing up the portfolio again. Because that in the past, if we look at the past 3 months here, the portfolio has actually gained $1,900, right? And the reason why that is because I deployed money to work around this time, right? Around this time I deployed money to work, and because the market has gone up from the lows to now, because the market has gone up so much, the portfolio has actually grown. You know, it has actually grown a lot. You know, so I'm waiting and seeing what's gonna happen. If we're gonna see something similar to this, then I'll be looking at deploying money to work. But for now, I'm just waiting and watching and just collecting dividends. This is a website that I usually just use during the day when I'm trading. This is called It's called Finviz, and it just gives you a nice graphical representation of all the different sectors of the stock market, how they've been doing, which companies have the most space in that industry. And if you look at this is a year's performance right here. As you can see, the sectors that have been beaten down is basically the finance sector right here. The finance sector has basically been beaten down pretty badly. The other one is the oil sector. The oil sector they've been hammered basically. Utilities a little bit of utilities and then real estate. Obviously, real estate will be hit more because of what's going on. And then here too is real estate. This is a little bit of consumer, but it's not. It hasn't really been. It hasn't gone down much as compared to 30. Like, can you imagine Exxon right there has gone down what, almost 50%. 50%. I know they pay dividend and all, but I don't. People that are putting a lot of money into Exxon and all these legacy oil companies, I don't know what they're doing, because it's okay to be collecting dividend, but if the underlying value of the company that you're investing in, if the underlying value is going down, right? You bought something for $100. That thing that you bought for $100 is paying you $1 every 3 months, but then your $100 has lost $50, and you're still getting paid $1. That's not a good exchange of your money. So people need to be very careful with that. In the airline industry too, they've obviously they took a big hit. Lockheed Martin probably not as much because they have big government contracts. We all know what happened to Boeing. It was pretty big. But yeah, like, this is how I like to look at the market. I'm a visual person, so this website really helped me a lot. Yeah, as you can see, the tech sector has done pretty well this year. Microsoft is up 42%. Apple has basically doubled. Nvidia is up 175%. So I've been looking at this recently, and I'm like, okay, I need to be putting more money into the tech sector. I think the tech sector is going to grow a lot, and they are going to benefit a lot from this whole situation. Yeah, so I'm going to be looking at putting more money into the tech sector, which I'll show you in a bit in the portfolio. If you go here and look at the 6-month performance of it, sorry about that. So this is 6-month performance. So in the past 6 months, we can see pretty much you can literally throw money at any of these companies and you would have made money. Even the ones that were decimated for the past year. The only one that haven't done well is Wells Fargo and Gilead here. Gilead Science. They're the one that are looking to make the drugs, and then that's let's see. Oh, that's Walgreens Boots. They haven't been doing well. But yeah, as you can see, pretty much the whole market has been up for the past 6 months. If we look at the 3 months, the past 3 months here, relatively decent. What's it called is taking a hit here. The utilities energy sector is taking a hit. Tech sector a little bit because people are rotating money out of tech. So that's that. If we look at 1 month, this is what we've done for the past month. So as you can see, Amazon is taking a hit. Microsoft and Apple. This is one of the reasons why I'm like, okay, I might look at the tech sector, because people are taking money out of the tech sector. I may be rotating it into a different sector. So as they're taking money out, it could present a big opportunity for you to start buying, because when the market starts going down, usually people take money out of the tech sector because the tech sector is heavy, right? So they take money out of the tech sector, put it into something else, and then once the market starts coming back up again and stimulus come in, everything comes in, then most likely people are going to be rotating money back into the tech sector again. So yeah, that's the 1 month performance. So if you go, let's just look at the week's performance. So the week performance hasn't been too bad. Like I said again, the tech sector, money is just rotating out of the tech sector here, and money is going back into industrials, going back into healthcare, a little bit of healthcare. You see, it's coming out of tech. It's coming out of communication. Consumer here, which is Amazon, is taking a huge market share there. And then it's just rotating back into the sectors. the sectors that were beaten down. A little bit of oil is recovering. Oil has recovered for the past week. So yeah, just this website is called FinViz, FINVIZ.com. You can go check it out. I'll probably leave a link in the description for you to check out. Yeah, and if you look at Friday was just a horrible day in the market. It was just a horrible day in the market. So looking, basically all this information, that's what I just showed you visually. If you look at Friday here, basically we just went straight down. We're trying to recover up and bounce a little bit, but we came back down in the after hours. Yeah, the past 5 days have just been horrible. But yeah, let's get into the portfolio. Taking a look at the portfolio here, if you look at the year-to-date performance as compared to what's been going on in the market, it hasn't been too bad. We're basically beating the market by a couple of percentage. I think the market has been down for like, let me just pop into it really quickly. From year to date so far, we are up. We're up on the market. Give me a second here. We're up on the market 2%, and as compared to the portfolio here, we are up 13%. So first of all, that's a great news. The portfolio is really doing well. If we look at for the past week, which was Friday, the portfolio generated 24 cents, and we lost $133 to the market. In the past week, we generated $7.33, and portfolio has grown by almost 452. And for the month, so from August 19th to September 19th here, the portfolio has generated $42. Take a moment to look at this. $42 in the past month that the portfolio has generated. So this portfolio is basically a money earning machine right here. Like I always say to everybody, I'm not an investment professional, but I know a lot about investing, and I have a specific way that I invest, which is right here, right? I invest using different instruments, right? This instrument, if I go into passive income, the passive income sector here year to date has generated $50. But within this sector, you can see each investment is broken into different sectors, right? So I'm not putting all my money into one particular sector, and even within those particular sectors, the allocations of them are different as well, you know. And I do it that way because if one sector is doing well, then you can put more money into it, and then when that don't do well, you can rotate that money into the other sector that is not doing so well, that could potentially go up. And at the same time, they are all earning you sweet dividend. You know, for the past month here, this passive income section has earned me $15 for the past month. If I go back and I look at the ETF section, the ETF section has earned $18, right? It's gone down a lot. But it has earned $18, right? This is how I believe a dividend investing portfolio should be set up. You should be very well diversified in sectors, in industries, in companies. Be as diversified as you possibly can be, so you spread all your eggs around in one place. So there's no one particular company that can ever like be a risk to your portfolio. This is just pure stock play that I have here. And in the past month, let's see how much this has earned in the past month. It has earned $2. So most of these companies, most of them probably reduce their dividend, or they haven't been paying dividend. But I mean, these are companies that are a little bit more risky. Not necessarily a little bit too risky, because Lowe's is not risky. I mean, Harley Davis is a bit risky, so you have a mix of both, right? So this is just like fun picks that I'm taking the risk on. Here are more like solid companies. These are like value plays that I have here. If I just randomly pick a sector here, consumer, for example, these are basically value plays like Disney, Target, Home Depot, Nike. You know, a lot of these companies, they are not going anywhere, and they all still gonna be around after the coronavirus pandemic. They're gonna do their thing and fly and overcome this whole situation that we all going through. So I'm a strong believer in investing in companies that are right here. These are companies that have strong balance sheets, companies that are poised to grow. They're going to grow over time, and companies that they're just solid. They're just very, very solid companies. And then the stocks that I have here is just like, you know, a little bit more risky, but they also very solid. Google is solid, Starbucks is solid, Nvidia is solid, AMD is solid. A lot of these companies are quite solid on their own, but you know, I do have some risky plays here as well, which are like Lyft, a little bit risky. Ford is a bit risky. AMC is a bit risky. Well, I mean, AMC, they have the biggest theater in the US. So I have a mix of both. And the reason why I invest this way is because I want to have peace of mind when I invest. If the market goes down, I'm not trying to be scared or worried about, oh, how is my portfolio going to survive. And at the same time, I have some monthly dividend ETF right here, like SPHD, this one, like they all pay at least that basic monthly income for me, that basic monthly dividend, which is like they all average like $15. This side of the portfolio, the ETF side, average $15 a month as basic, right? So as I develop and I have more money, I'm gonna be buying a lot more of the monthly dividend one. At least I want to have like maybe a solid of $100, $200 that each of these companies, among these companies, they paying every month. That is just solid. Like no matter what, you still get those dividend, solid dividend payment from those monthly income companies. So yeah, and the same thing. This is Berkshire Hathaway. I basically following what Warren Buffett is doing here. Some of the companies that Warren Buffett is investing in, I'm investing in as well. This side of the portfolio is completely managed by M1. I literally don't do anything. M1 just takes care of this side of the portfolio. And for the past month, it has generated $5.12 for me. So can you imagine how much Warren Buffett has made in the past month? So yeah. But yeah, so that is how I like to invest. If we just take a look here, if you take a look, for the past month, we've generated $42. For the past week, we've generated $7.33. And for the past day, which will be Friday, we generated 24 cents. To the transaction section here. The last time, actually, you know what, let's go to the next page. Usually, look, August 11th, as you can see, I was steadily putting in like roughly about $200 on a regular basis into the portfolio, and it goes in, buys a decent amount. Let's open this one at random. It goes in and buys a decent amount of each. You know, $1 here, $1 here, 13 here, 20 here, 10 here, 10 here, and that's how M1 buys the stock in the portfolio, right? So what I've been doing is I've just been holding off on contributing money into the portfolio, just because of the uncertainty that's going on, first of all, in the markets and with Congress. Because if there's no stimulus money coming into the market is definitely going to go down. The market is going to go down because people don't have jobs. If people don't have jobs, there's no way that they can make money. So the market is going to go down. So I'm just holding off on the cash. And then what I'm doing is all the little dividend that comes in, I basically just put that right into Tesla, right? Because I'm a big Tesla fan. So yeah, the last time I put serious money into the portfolio was August 27th, right here. August 27th, and that's when I put $221, and it's gonna be a month or so, a month roughly. So all I've just been buying recently was I've been buying just Tesla. That's all I've been buying recently. I've just been buying as much Tesla stock as I can get my hands on. I'm basically just throwing the dividend into the Tesla stocks. That's all I'm doing right now, and I'm just holding on to cash because of the uncertainty. And once we see what would happen in the market, then we'll go back into putting money into the market. But on the dividend side here, going to the dividend side, this is how the money has been coming in: 54 cents, 14 cents, 3 cents, 4 cents from all these companies. You know, a lot of companies are still paying their dividend. Even McDonald's right here. McDonald's paid me 13 cents. New Era Energy paid me 69 cents, 81 cents. From Realty Income, Tyson Foods paid 17 cents. Wendy's paid a dividend. So this is why investing is very important. You have to invest because a lot of these companies, they still make a ton of money regardless. Like look at Waste Management just paid 14 cents. So I'm gonna keep on sticking with my investment thesis here, my investment philosophy. I hope you get what I'm trying to do by sharing this information with you. Portfolio is still solid regardless of what's going on. We've actually been up. So that's the thing I love about M1, because it's a data machine. They collect all this data. As you can see, this data started collecting May 19th, and now we're in September. And from May to September, we've done pretty well. We've done well, and yeah, let's go in. Let me highlight some few things for you. So going into Tesla here, let's see, for the past month, we have added an extra $400 to the portfolio. There you go. So on Friday, we gained $130 on for the past week. We've gained $400 for the past month, $400 for the past 3 months. We've gained $1,100, and year to date, we've gained over $1,300. Now, during this little downturn here, I was putting a couple of dollars into the market. You know, $20, $30, $40, just putting a little bit of money into the market around this area, a little bit around this area. So hopefully we'll see what would happen with Tesla during the battery day. Hopefully their stock gets bumped up, and it will increase the value of the portfolio. I am a proud owner of 7 shares of Tesla. 7 shares, so I'm happy about that. I'm looking forward to owning maybe 200-300 shares at some point in the future. So we are looking forward to that. So yeah, in the energy sector here, as year to date, as you can see, Chevron, they've gone down a lot, and 15%, 17% here. But as you can see, my allocation is just 1%. So I'm just holding those to strictly collect dividend. Most likely I'm not adding any more money to that. Yeah, that's what I wanted to highlight for you guys. The portfolio is doing solid. Nothing really much to say. Right here, this is dividend that has basically been deposited into the account and will go right into Tesla. So yeah, that's it with the portfolio. Let's get into a bit of the news. So Warren Buffett's company Berkshire invested into this new company called Snowflake. And what Snowflake does is they're cloud data storage warehouse, right? So they're competing with Google and Amazon. So Warren Buffett bought the company into the IPO, right? And the company went, he invested $250 million into the company. And I will show you in a second how much Warren Buffett ended up making in this transaction, right? He invested $250 million. Most likely, I don't think it's Warren Buffett himself that actually picked this out. Maybe one of his fund managers. Most likely, it's one of his fund managers that actually picked this out, because this is Snowflake is definitely out of Warren Buffett's circle of competence. So yeah, it's definitely out of his circle of competence. So this is the next article by CNBC here. As you can see, he ended up making a quick $800 million from investing 250. Talk about quick flip. Right? This is huge. I figured let me just point that out. I'll leave this article for you in the description if you are interested in reading it. But he made a nice quick profit. His business is, people that work for him are really smart people. They can look at all this fresh new companies that are coming out and they can just jump on them. This is when you have big bucks, you're able to make this kind of money really quick. So looking at Snowflake's website here, as you can see, they are a cloud data platform. So instead of having all your data in a bunch of different places, you can have it in one warehouse. And they also they have really good engineers. They have really good engineers, and they're basically a warehouse for data. So they have algorithms that can help you figure out what you're doing, how to make more sense off of the data that your company have. So they are going to be one of the biggest cloud company, and I think they are going to grow over time really quickly as well. So I'm going to be keeping an eye on this. As a matter of fact, I've actually added them to my portfolio. So I added it to the portfolio here as well. Same thing as Taiwan Semiconductors. I added them to the portfolio. They are under the tech sector. I'll update the link in the description so you can check it out as well. I'm gonna be adding maybe a couple of dollars here and there per week or so into these companies, and just letting it grow over time. They have a big potential to be a pretty big company as well, because the company Snowflake is actually growing more than like 30% year over year, right? So with them going public and raising money, they're able to redeploy that money back into their business and make the business a bit bigger, and that's where you create shareholder value. So most likely I'm going to be adding some more into I'm going to be buying this company and adding a bit more to my portfolio as well. So I would highly recommend that you go and check out the M1 platform. I have a link in the description. If you use the link, you're going to be helping the channel out. I highly recommend you go and check out this platform. It's an amazing platform for anybody that is interested in dividend investing, which is just one of the best way to create passive income in the stock market. Dividend investing is pretty much one of the best way, because you actually don't have to do anything. All you just do is you put money into the portfolio and you're good. And as you can see here, you have all these different sections that you can do. You can invest, you can have your checking account, you can have borrow here, which is like a credit account, and transfer, which you're moving money from your other accounts to this one, so, or moving money out of this. But as you can see so far, the portfolio is doing really well, and I highly recommend, for those that are interested in dividend investing, I recommend this platform. Is a complete hands-off platform, and they also offer very, very cheap rate if you are trying to like borrow or anything like that. So yeah, I highly recommend this. But on that note, I'm gonna leave it at this. I hope you've learned something. Please like and subscribe to the channel, and I'm looking forward to talking to you on next week's portfolio update.